Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yeah, Bitcoin not being able to make its way above this resistance area here, and as you can see, we're at basically this same low here. So if we lose this low, you would definitely expect an acceleration down into our support zone, of which we have to hope we hold, otherwise we'll be seeing lower prices. So not much else to say here on Bitcoin. We're at a level where we need to move up, otherwise we'll be coming to test this support, and then if we move up, ultimately we've got this overhead resistance that we need to try and make it through. Obviously, as we know, we are getting relatively driven by the stock market, which is outperforming Bitcoin on a relative basis. Obviously, adjusting for volatility, has had a nice move up, but it is easing off this horizontal resistance area here. A lot of this rally has most likely been driven by options expiry, because in this move down there was a lot of fear and a lot of puts were being bought, a lot of downside protection, and as we moved into the end of the month and the price started to squeeze up, obviously those options dealers that were hedging that downside in the underlying were then able to buy back those short hedges, i.e. buy back the stock, and that was obviously squeezing the price up, along with volatility going down as well, which was further helping them basically get out of their positions. So is a bit of a technical rally based on that we've had. So now it's time to regroup, see into the new month the shorts get reapplied, as in the downside protection, or whether we have like a bit of euphoria at the moment. Obviously, we're getting mixed earnings from the tech companies that are obviously the overcrowded trades at the moment. But also notably, we had a massive miss on the jobs number, on the ADP jobs number. A massive miss. I think it was about, they were expecting 200,000 jobs added, but there were 300,000 lost. So a massive swing. The problem with, well, the initial flip side to that is the market sees that as bullish, as bad news is good news, because it means the Fed doesn't necessarily, has got a reason to not necessarily do all the tightening, because obviously they've got their dual mandate of price stability and unemployment. But the other problem is wage price inflation, because obviously the wage market is supply and demand, as every market is. So if there is less supply, then obviously, and those jobs are still there, then there has to be increasing prices, i.e. increasing wages, and wages, as we spoke about, is pretty much the only inflation that the global elites that run this system really care about. Inflation of asset prices is great. Inflation of everything is great. Obviously, as long as it isn't sparking social unrest. But obviously, the inflation of the normal person getting more wages is not great. That's what they don't like. That's why they export all your jobs to other countries where wages are basically lower, because they hate paying people. They want all the money to themselves. So so yeah, there is that element. So yeah, this deteriorating jobs market, potentially deteriorating jobs market, is potentially inflationary in the way that actually the Fed will really want to try and control. Let's also have a look at the DXY. DXY basically all the way down to our support area, bouncing off it, no surprise there. So now it's a case of, do we just stay within this range, and then ultimately do we break back above or break back below? We shall have to see, but for the time being, it looks like we could potentially be pinned like we were in this exact same range here as before. The 10-year not doing a lot at all here, and oil still, well, continuing with its grind up, nearly got to $90 on this contract, on this WTI contract, but easing off there. But you can see is not looking the most bearish, and this is not the most bearish for inflation either. Also, we have other issues. Well, obviously, remember what I said about good news being bad news. You have issues with the recently good GDP numbers, which are attributed a lot to companies building up inventory. But obviously, the supply chains potentially isn't able to get those extra extra obviously goods into their inventory, which is then obviously boosting GDP. But then it's a case of, are they going to be bought? Are they going to be paid for? And obviously as they build up those inventories, they don't have to keep building up unless they're getting bought. And you can make a pretty strong argument that the consumers bought a lot of everything they need, and they don't need to buy the stuff again. Obviously bought a lot of things recently with all the stimulus. They don't need to buy again, so that boost to GDP is then going to be lost, as obviously the inventories are there and they're not getting bought, and they're not going to need to get restocked or refilled up again. So that is obviously negative for GDP. But then again, like I said, good news, we are in an environment of good news is bad news, and bad news is good news, because we are only getting driven by Fed liquidity at this point. In this late stage Ponzi, liquidity is the only thing that matters. Liquidity is key. Liquidity is it. That is it. That is the only reason why we're here. Yes, that is the start. That is that. Ethereum Satoshi pairing Ethereum Satoshi pairing still holding above this this support level here, which is good. Tried to make some moves up here, has got to get up to this resistance area and ultimately break through, because if you do pop below this support zone, then yeah, we'll potentially be coming back down to test these lower numbers again. So it will just depend on what kind of risk appetite people in the crypto market are fancying. The USD pair, and as you can see, rejection at this horizontal, so obviously needs to get back up over there. Bitcoin dominance easing off a little bit here into a major area of support. So if we can get back below here, it will be potentially all systems go back down to this support. But if we get basically supported here and then get back above this trend line, and particularly above this horizontal here as well, then yeah, we could be looking at a bit of a pain trade, and this will probably coincide with Bitcoin moving down as well. So yes, potential warning signs there, but obviously if we do make it below here, we could go on a nice run. But yeah, the S&P basically needs to try and get back above this high. If it does above 4,600, then I think that will be finally it, after we've digested bad jobs numbers, potential bad GDP coming. Obviously we've got non-farm on Friday, non-farm payrolls on Friday, which could obviously give us a better insight into the job market, the labour market, and then then the market can move accordingly on there. So like I said, we're hoping for a miss. We're hoping for a big miss on the whatchamacallit, on the non-farm payrolls, so that we can just get some more of our monetary stimulus, or basically less easing of which. So yeah, let's look at those stochastics. 4 hour getting quite low here, so we could get a nice move up from the 4 hour once it bottoms out, but hasn't bottomed out as of yet. 10 hour diving down, 12 hour coming down, daily looking to turn back over here, so we are getting quite negative reads on these lower time frames, and then the higher time frames by daily looking okay, obviously moving up from a low level. 3 day just thereabouts. 5 day an important one turning up, but doesn't necessarily mean price has to go up immediately. Just means ultimately we could be around the bottom area and then eventually start to make a nice move up. Weekly still coming down, bi-weekly still coming down, and monthly coming down. So yeah, overall it is kind of looking like it is a sell the rips, sell the rally sort of read from the stochastics. But ultimately we are watching this. We're watching the economic data, because if the jobs numbers, the GDP numbers start to come out worse, also inflation numbers with base effects will start to wind down those headline statistics. Obviously the inflation numbers are literally based on the 12-month rolling period, so it was this February, March, April time that acceleration really accelerated last year. So unless inflation is going to really accelerate more this year in these months, then it has to be then the inflation statistic has to come down. And then if we actually have inflation coming down and not going up, then we'll get a significantly lower numbers. We should get an easing off inflation. So potential bad labour market numbers, but we almost certainly will get an easing off in the headline inflation figures. And then also what was the other one? what was it? Yeah, I can't remember what it was now. But obviously the other bearish factor that we're talking about. Oh yeah, the GDP numbers. Yes, the GDP numbers, the inflation easing off, and obviously the jobs market weakening. All signs that the Fed won't potentially get these 6 or 7 rate hikes in, and then we'll just continue with the Ponzi, just trying to rely on a trickle down wealth effect, which clearly doesn't benefit the whole of the economy, the whole of the people in the economy. It does obviously benefit a certain few quite a lot, and it does also benefit a certain crazy degens as well quite a lot that are obviously involved in meme stocks and crypto. They've made good money. Those people are potentially a drag on labour force participation because they obviously don't necessarily have the money needing to work at the moment. So yeah, we shall have to see what happens. Interesting times. So yeah, remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.